Welcome to our monthly update on employment tax developments led by the Uber payroll tax case and Payday Super. On the 6th of September 2024, the New South Wales Supreme Court handed down its decision in Uber Australia for Chief Commissioner of State Revenue, finding that Uber should not be subject to payroll tax on payments made to its drivers. On the 18th of September, the government released a fact sheet providing further details regarding Payday Super, with a few unexpected surprises to be aware of. We'll delve into these topics and other significant updates in this video. We released a detailed video summarizing the Uber payroll tax case in early September, but have covered the key elements of the case for your reference. In brief, the court found that drivers supplied services to Uber, resulting in a relevant contract as defined in the Payroll Tax Act. Specifically, the three activities of driving, rating, and referring, either on their own or in combination, were concluded to be services, and those services were viewed as being for or in relation to the performance of work. The court accordingly considered the application of the relevant contract exemptions, with the majority of these exemptions being rejected, both from a technical perspective and due to lack of evidence. The court then considered whether the payments made by Uber were for or in relation to the performance of work. Although a relevant contract was found to exist between the driver and Uber, Uber was not making any payments to the driver. Instead, it was actually the rider who made payments to the drivers, and Uber's role in the arrangement was in a capacity as a limited payment collection agent. On this basis, and having regard to the contractual terms and the purpose of the contractor provisions, the court concluded that payments were not for or in relation to the performance of work. This resulted in an $81 million payroll tax reduction. Payday Super is the biggest change to the payroll landscape since the ATO introduced single-touch payroll in 2018. Starting the 1st of July 2026, employers will be required to pay superannuation guarantee contributions every pay cycle instead of each quarter. We have prepared a detailed thought leadership piece on Payday Super, but some key takeaways for this video include: first, employers will generally have 7 days to make contributions into the employee's superannuation fund from the date of payment. Second, there have been significant changes to the superannuation guarantee charge calculations. Superannuation shortfalls will be calculated on ordinary time earnings instead of an employee's salary and wages. The rate of interest will be different and will compound daily. The current admin penalty, which is currently $20 per quarter, will be replaced with a new uplift system. And finally, the SGC elements, super shortfall, notional earnings, and administration charges will all be tax deductible. In other superannuation news, we have a slight update arising in respect of single-touch payroll and default assessments. The ATO has made a slight update to PSLA 2007-10 where, in making a default assessment, the ATO may use single-touch payroll data as a possible information source. Finally, the Paid Parental Leave Amendment Bill 2024 was passed by both Houses of Parliament without amendments. In short, the bill consists of a series of legislative amendments to provide for the payment of superannuation contributions for people who receive Commonwealth-funded paid parental leave pay in respect of children who are born on or after the 1st of July 2025. Pivoting to pay-as-you-go withholding tax, we have noted a fair bit of ATO activity in relation to large withholders, being those organisations or groups who withhold more than $1 million per year, as a result of inconsistencies between single-touch payroll reporting and amounts being paid to the ATO. Please connect with us if you wish to discuss this further. Thank you for joining our employment tax update for September 2024. It is evident that Payday Super is a significant change in the payroll landscape, and increased use of single-touch payroll data should be something organisations focus on. As always, please feel free to connect with your local RSM contact, being myself and Peter in Melbourne, Gina and Neve in Perth, and Jason in Sydney.